Well, right now the base case is actually, just uncertainty. Our base case is, there will be a deal at some point. So, this vote is just one step in a series of further manoeuvres by all parties involved. It's important to stress one of the amendments last week that Wilfred just talked about has strengthened the hand of Parliament within the negotiations, which has reduced the likelihood of a no deal, of a crash out. And I think that's one reason why UK assets are not further under the weather at this point.
OK, do you think that, I don't know, I don't want to call it bad news, Geoff, because there's people obviously there who want Brexit. They voted for it after all. But from a market's perspective, do you think the, quote, bad news is priced in?
A lot of the bad news, I would say, or the uncertainty is priced in, again, especially after last week. Of course, there are certain forks in the road and different directions people will go down. If, let's just say, tomorrow's developments do lead to a fall in the Prime Minister, and then if there's a general election, then that's more domestic uncertainty, and we bring in a domestic element to it. So, clearly not out of the woods yet. But again, sterling is underpositioned, quite under-owned right now. So, that's why even if the vote has failed tomorrow, hard to see, things deteriorating further from here.
What if May surprises? What if she wins the day? What if the vote passes? What then, Geoff?
That really, I think, is what is not talked enough about right now. So, and there are two ways to go about it. One is if there's a surprise victory tomorrow, then we're going to see a big rally in UK assets, especially sterling. Or right now, what's talked about is a loss of 100 votes or something along those lines. If the vote is actually much narrower, and quite a few people have hinted at this, then that could be construed as an upside surprise as well, because immediately, even as soon as before Christmas, a new vote could be brought through, and maybe that will pass.